Djuric is the CEO and co-founder of Noble, a stablecoin issuance and orchestration business backed by Paradigm, Borderless, Polychain, and Circle. Circle, obviously, in the news lately. Prior to Noble, Jelena held marketing and ecosystem roles at Informal Systems, which is the company behind Cosmos. Welcome. Thanks for doing this with me.
Thank you so much for having me, Jeremy. Yeah, definitely a pleasure to be
Um,
here.
so Noble's mission is to become the Shopify for stablecoins. This is something I read somewhere. It's
Yeah,
possible that that's been re-architected slightly since I read it, but can you elaborate on what that means, or even just what the mission of the company is, if that's not quite accurate?
definitely. So yeah, when we kind of put forward that statement, it was in relation to the kind of the original core business, which is stablecoin issuance. So basically, we believe that there will be an abundance of stablecoin issuers that are coming to market that already exist, and all of them obviously want to go direct to consumer to uh, different applications and different sort of businesses. And we like to kind of bridge that gap and provide a seamless issuance infrastructure for the proliferation of these stable coins. So in the same way that Shopify, made it really easy for brick and mortar to go direct to consumer online with their e-commerce infrastructure, we like to do the same thing, but for money, basically.
Um, I mean, that leads me directly to a thing that I wanted to speak with you about, which is the idea of the topology of the internet. Because if we talk about the long tail of anything, we have to talk about the topology of the internet. And you see a similar pattern here to the way that the internet developed and information, moved through those early days of the internet.
Yeah, I mean, obviously, when I think of blockchains, I think of the internet like a value. This is kind of a well-known concept, or like the internet of money. Whereas obviously the previous internet was the internet for content and like the transmission of content. But I think what blockchains obviously enable is this like direct peer-to-peer kind of system for the transmission of real value. And stablecoins are a big part of that, obviously, because it is direct kind of replication of like what you get in like the fiat kind of traditional banking system with like dollars and real kind of currencies. But they take a crypto native kind of internet native form where you don't need the banks to kind of intermediate those transactions. Obviously, that all exists on a distributed ledger, which we call the blockchain. So yeah, basically, I definitely see blockchains as an evolution of the internet, but this time it's bringing kind of native value, native money, to these systems. And yeah, stable coins are kind of paving the way there in many regards.
And it's not just an efficiency gain, right? I mean, this is I think the quote was something about entirely new possibilities, right? We're not just lifting and shifting a dollar on chain so that we can move it faster or move it cheaper. There's like a whole world beyond that.
Yeah. Yeah, I would say like banks and maybe like fintechs of the previous era, obviously that's what they do, right? Like they take your like cash, they put it in a safe place that you like, can entrust them with. They record that like digitally, like in your online kind of banking interface, but you still have those banks and those intermediaries kind of facilitating that flow, facilitating that movement. Whereas blockchains and stablecoins are themselves kind of exist beyond that, I guess, traditional system where you can actually have a US dollar representation in a crypto native way, like a US dollar stablecoin that holds its value, that is properly kind of collateralized, but that exists outside of your traditional banking infrastructure.
Yeah, definitely. I look at it like these are all different money promises, right? If I put my money in a bank, I get a promise back. In Canada, that's going to come with CDIC insurance up to a certain level. If I put my money into Wealthsimple, funny enough, even though they are not a bank, they offer much higher CDIC rates than a traditional bank because they're doing deposit aggregation. So some innovation there. And this is just like the next step in that journey
Yeah.
from a format perspective, right?
Yeah.
Let's talk
Definitely.
about the noble dollar then. So what is the noble dollar? Like, how would you explain that to somebody in a fintech that sort of has spatial awareness of stable coins, but doesn't
Yeah.
necessarily dig in as deeply as you and I?
Yeah. So basically, Noble 1.0 was kind of solving for this issuance problem that I described, and that's when we obviously were able to successfully bring native USDC and other stablecoins to the Cosmos ecosystem. And so we developed this really reliable kind of infrastructure for the issuance of these stablecoins. But the more we kind of fell down the stablecoin rabbit hole, the more we realized is the design space for stablecoins is like ever growing. We obviously have a lot of like demand for, I would say, stablecoins, stablecoin innovation and just thinking about stablecoins in a way that is maybe bigger than what we currently have. And so when we started our research and kind of started evaluating the landscape, we came across a project called M0. And so USDN is a stablecoin on top of this M0 infrastructure, and basically, what they created was a system where you can become a distributor of what they call M. M stands for money, and you can take that M and you can white label it. And so we white labeled it as the noble dollar, and that USDN, that M, is equivalent to $1. It's collateralized by treasury bills. I should mention this is one USD, not Canadian, and those treasury bills that are collateralizing actually over collateralizing by about 6%. So it's 106% collateralized. That T-bill yield actually gets passed on to the distributor and they can decide like what to do with that underlying yield. And so it's this very elegant, I would say, solution because on the one hand, you have the safety and reliability of like that treasury bill like yield component. And so from like a kind of stability perspective, the US dollar stablecoins in this network are like as safe as like a USDC, right? But there is this like other component, which is the yield, right? And like how that gets passed on by the distributors that are, doing the hard work of kind of finding use cases and users for these stablecoins. And so what we built kind of using this like stack that, to be clear, M0 kind of initially bootstrapped is what we call composable yield. So basically, in a very kind of like crypto native, DeFi native way, you can take that T-bill rate, which right now is around 4%, and you can compose it in interesting ways. So for example, if you're running, let's say, a decentralized exchange, you can say, we are going to pass on that yield to end users, as a mechanism to, like as a savings mechanism. Or you can say, you know what, we're going to take that yield and we're going to reinvest it into the protocol by, I don't know, subsidizing trading fees. Or actually, we're going to make the decision to take all of that revenue for the company and instead of like passing on to the end user. So in that sense, the end users don't get any yield. So really that programmable kind of nature of that yield component is like what's interesting because right now, basically, if you are holding a stablecoin that does earn you the yield, and there are examples where this exists, it's just kind of a one and done. Like you either get the yield or you don't. Whereas here, we're actually saying, depending on the use case, depending on the application, it could be trading, it could be lending, it could be payments, it could really be anything. We're going to compose the yield in a way that fits that use case.
Yeah, absolutely. And by making it more composable, you're pushing it out to the edges of the network, right? Whereas like, if you're Coinbase and you want to stand up a program like Earn, Coinbase needs to get in the middle of that transaction. They need to collect a distribution fee from Circle, which is, very public information. And then, they need to use a regulatory framework in order to deliver that through to the end user in their sort of custodial product. You're saying like, let's push all of this out on chain. Let's make it more composable. Let's see what people build with it, right? Like ultimately, when we get to this level of composability and we get things out to the edges, you can't really imagine what people are going to do with it. You have some assumptions. Obviously, it makes the stablecoin more useful because
Yeah.
You don't have idle cash. And the noble dollar is now at, I mean, the last I saw it was 600 million TVL and 8 billion in volume. Is that?
Yeah, so actually the noble dollar itself is about 108 million of issuance right now. But the entire TVL of the noble chain, including kind of USDC and the other assets that we support, that's about 650 million. And yeah, and that's resulted in kind of 8 billion, more than, yeah, $9 billion of transaction volume in the last year and a bit.
What are the primary use cases?
Yeah, so it's mostly DeFi, it's mostly trading. Right now, yeah, we work with like 50 plus applications,
Wow.
blockchains that, yeah, that all kind of leverage Noble's kind of stablecoin infrastructure. Um, for a Noble Dollar, we're looking to go live with Noble Dollar. We're calling it Noble Dollar everywhere. So the USDN will be available, on the EVM side of things, on the Cosmos side of things, and we haven't shipped that yet, but that's coming soon. So yeah, I mean, you're looking at could be perp stexes, lending markets, things like this.
Awesome.
Yeah.
Any sort of green shoots for use cases that take us that little bit further beyond DeFi? I mean, it's all DeFi, but the use cases, out at the edges might start to look less like DeFi, even though they, of course, are.
Yeah, I mean, if you look at the most profitable protocols right now, it's like Hyperliquid and Pump.Fun, two opposite ends of the spectrum, right?
Mhm.
We have perps, and then you have, yeah, basically a casino in terms of meme coin speculation. So I would say that's the current reality. What I'm excited for is the less speculative, more mainstream applications like payments. I think we have a long way to go when it comes to crypto native payment infrastructure. Um, but yeah, I think the cool thing about Noble Dollar and just generally composable yield is you have this interesting like flywheel where basically if you have kind of applications that are meaningfully driving volume around like USDN, those developers have like full control over how that yield is distributed. So either you're incentivizing and kind of growing your user base, or you're just taking that as revenue to reinvest into the company, into the business, so that you can hopefully continue shipping products that people continue to use and love. Whereas I think right now, applications that drive a meaningful amount of kind of stablecoin kind of adoption, they don't necessarily kind of like see that like upside around the economics of that stablecoin liquidity. And so, yeah, basically, composable yield and USDN is like a very new product. It's kind of a synergy between like USDC and DAI for those that are familiar with MakerDAO or USDS. So yeah, we'll kind of see what happens there.
Yeah, for sure. I mean, I come from a fintech background, although I've been working on the crypto side of the house for, for, well, 5 or 6 years now. This is the equivalent of that deposit aggregation
Yeah,
activity that Wealthsimple has to stand up from scratch, and only the very
yeah,
largest fintechs are going to be able to do that in a meaningful way. And this opens that up to anybody that's developing software that creates utility and stickiness around
yeah,
money, right? Like that's just such a big deal. I get way too
yeah.
excited about these points.
Yeah. Well, I mean, a dream of mine, of course, is for Noble to one day be a type of crypto native neobank type service or product, because I think like, yeah, the fintechs of the past, they, like you said, unless they have like some sort of advantage kind of out of the gate, whether that's like through like a massive funding round or relationships with like kind of kind of banks, it's really hard to like compete, I think, unless you have a lot of like volume and liquidity and users. Whereas, as you said, for crypto, because we have access to these primitives um, that exist, right now, like today, like that I think makes it a lot easier. I mean, even from like an end user perspective, like the fact that when I put my dollars in my checking account, even a high interest savings account, like I'm never getting like like I'm never actually getting what the banks are getting in terms of the rates. So I think it's like unfair from that perspective as well. Like average consumers should get as much upside when, like, in terms of exposure to these, um, you know, in the U.S. context, like Treasury bill yield rates, and currently, you're actually like losing money because there's inflation and like, yeah, technically, your currency is being devalued while you keep it in like your bank account without access to any of these real yield rates.
That and just like access to US dollars generally. I mean, I think that people are kind of tired of the point around remittance and demand for US dollars at this point. But I think what I always try to do is, call attention to the fact that like I live in Toronto. There's a TD Bank right behind me. I basically say this every time I do an episode. There's a
Yeah.
TD Bank behind me. They'll probably pay me 1.5% on my US dollars. And if I drive 90 minutes south to Buffalo and walk into a TD Bank branch, they'll pay me 4%.
Yeah.
Like there's something off about that, right? So we tend to think about this as like a global south problem, but the reality is even myself as a Canadian in a market that is overbanked, there are certain pockets of my financial life that are underbanked, like US dollars, for example. So
Yeah.
um yeah, I mean it hits home kind of everywhere. Maybe let's transition to a bit of your background.
Mhm.
I didn't realize that from an education perspective, you have a background in political science.
Yeah, yeah. I don't have a formal computer science, software engineering background, so everything that I've done in crypto in this crazy blockchain world is fully self-taught. So yeah, I studied poli sci, some econ, and yeah, a very interdisciplinary degree at the University of Toronto.
Very cool. Yeah, I actually I'm right by U of T right now.
Nice.
I did the same at Laurier,
Oh,
actually.
there you go. Yeah.
Yeah, poli sci and economics. So we sort of share that, and then obviously we share the fact that today, 20-ish years later for me, we've both sort of been around the ecosystem in Toronto for some time. You started the Web3 Council in
I
Canada as well.
Yeah, I did. So I co-founded the Canadian Web3 Council a few years ago at this point. And basically it was a response to like a lack of regulatory clarity in Canada around crypto. Um, I would say actually since I started that, maybe it's gone even worse. Not that there's a lack
Yep.
of clarity, but there's just like bad guidance, especially around stablecoins. And that's like in complete contrast to the US where I now live. I live in New York City now. And so basically, the Canadian regulators in Ontario, they're of the perspective that stablecoins are treated as securities. Whereas here in the US, there's a massive legislation called the Genius Act that is very likely to pass soon, and they treat stablecoins as payments instruments. So it's a complete opposite approach as the Canadians. But at the same time, we did, we worked very hard to kind of bootstrap the council in Canada to get the right folks involved, including Simple Crypto and Ether Capital and Figment and Wonderfy and many others. And so it's a great group. They're all very successful businesses in their own right that have pushed the crypto space forward in one way or another. But I think from a regulatory perspective, it's still not where we would, where I think it should be personally.
I get the sense that we're going to catch up quickly though, because the Canadian Securities Administrators, like the way that we approached in Canada, the way that we approached the difference between, buying crypto and that being a security and buying crypto, as a commodity in such a way that I would hold it, in a non-custodial wallet and I would self-direct it after the initial purchase. Like, that was very well regarded interpretation for a long time. And so I think we have it in us. I just get the sense that uh, folks here were trying to pump the brakes really quickly over the last little bit, but hopefully there's some unlock. And of course, this is like a topic of every conversation that I have, because part of why I do this is because, I exist in this global context, being in this industry. I work for Avara. Avara is based out of London. I get a lot of exposure to people from all over the world that care about this stuff. And and different regulatory frameworks in different markets, and I ultimately want to see Canada succeed here. You know, Ethereum was built here. That community started here. And if you believe that that's going to be the next generation global financial system, and you know, you're a Canadian that believes in international trade, international institutions, and the exporting of our cultural values, you
Yeah.
kind of have to be on board with Ethereum. Like, I don't understand why we don't have, you know, a mandate somewhere within the federal government that says, you know, we're going to support the development of this technology and the creation of jobs. But that's just me pitching it.
Yeah.
Um, something about uh, something about the way you've spoken of Noble and the Noble dollar leads me to believe that to get to scale, you think that Noble needs to potentially issue assets in different currencies, not just US dollars.
Yeah. Yeah, there's a number of ways of looking at this, and this is like a hot topic of debate in the stablecoin community, which is right now about 99% of the market, which is around a $250 billion market for stablecoins. About 99% of those are US dollar denominated. So euros, the yen, these are not, I mean, they exist, but they're not well adopted. And I am of the opinion that those metrics don't correspond to reality, right? If you look at like the currency market as a whole, yes, the US dollar dominates, but you have the euro behind that. You have the Great British Pound, you have the yen, and there's reasons for that, right? Like the yen in Asia is a currency used for, like to conduct like business dealings. Obviously the euro, we understand the value there with the European Economic Area. And so I think for stablecoins to become even more mainstream than they already are, you're going to get better liquidity, better adoption of these non-US dollar stablecoins like the euro, which Noble currently supports, and others. And so I think there's a couple of reasons why non-US dollars have not reached kind of mass adoption yet. One, like there just isn't a lot of liquidity for like the euro, for example. Like the deepest euro dollar liquidity pool that I've seen is like, I don't know, 10 million or something, like something super small, right? And so you're just like not going to get good pricing. You're not going to get good rates. It's just, yeah, it's not going to work. I would say the other thing is lack of user-facing applications that like have kind of reached that proverbial mainstream. Like let's say like a payments application that is like directed at the European market, for example, or and therefore the euro. And so for Noble, one thing that we're really excited about because we started out like kind of at the protocol kind of issuance layer, and we're now working our way up the stack. We've actually seen like what like is missing and what is not missing. And one thing, of course, is being able to like route through deep pools of liquidity for non-US dollar stablecoins like the euro. So yeah, we're really excited to kind of start developing that ourselves. And one of the ways we're going to be doing that is on our application layer that we're currently in the phase of growing and building out. But yeah, I would say even though like stablecoins have hit this like tremendous kind of growth, or like this 250 billion market, there's still a long way to go around like applications and like liquidity provisioning. The other thing to kind of put into perspective on like how far we've come, but how long we have to go is 5 years ago, the stablecoin market was roughly 5 billion. Okay. Now it's 250 billion. In 5 years, there's projections by Citibank, various kind of venture funds, et cetera, that project the market to be about between 1 and 2 trillion. So yeah, I think part of that growth will be non-US dollar stablecoins.
Yeah, it certainly has to be if payments is going to drive any of that. You know, there's an upper bound to the utility of a stable coin. if it's not
Yeah.
issued in my local currency. And, you know, one of the more interesting things that, I'd like to understand is Visa going to allow other stable coins to be settled on VisaNet? Like that announcement about USDC settlement through VisaNet was 4 years ago. That was very
Mm.
early. I mean, I wouldn't have faulted them for making that move today, let alone 4 years ago. And that just opens up a really big part of the large value transfers because so many fintechs and others are settling with Visa every day through their banking partners. And as soon as you get settlement with Visa, in a local currency denominated stable coin, you really start to see how these dollars can make a round trip, and the flywheel just really starts to go. So I'm particularly excited about that. Um, you have an open role for head of marketing right now. We're kind of talking
Yes.
about
Mm.
how the industry is going to scale and what role Noble's going to have in that. What are you looking for in this person? Like, is this person must be very difficult to find.
It is so difficult to find. So if you have any candidates, like, or if anyone's like listening, that has a referral or thinks they could be a good candidate, like, please reach out. It's very hard. Right now we're in this like very interesting phase where we're like still growing up as an indie. Like, to be clear, like there's still a lot of um, nonsense, right? A lot of like, there is still risk, right, with like these products. You know, we're not in like the era of like FTX anymore, where that was like clearly just like a pure case of fraud. But we're in this like area where, we're trying to build for a mainstream audience. We're trying to get um users that maybe are scared of crypto and trying to onboard them through like non-speculative use cases like payments, right? Like your traditional kind of financial products that they already understand on a basic level. And so, yeah, we're basically looking for a marketing person that can translate crypto native concepts to like a global mainstream audience. But that's really hard because typically marketers like in crypto are either just marketing to themselves and to like their friends, or they're so out of touch with crypto that they don't know how to market it at all. They just kind of look at it as like another, I don't know, Web 2 tech SaaS product, which it's just not. So yeah, it's hard. It's really hard.
I find that the people that I know that are really successful in crypto, and this is probably true anywhere, they have a much deeper why. Like I'm interested in this because
It's a great way of putting it.
it makes sense that we would have open, accessible, programmable value on the internet. I mean, that's just like a philosophical underpinning of the last 10 years of my life, right? So when you find these people, though, it must be easy to get them in and to make them productive because there's so much opportunity. Like they can take what you've done,
Yeah.
and if they really understand it, and you're very simpatico in terms of like the way you want to roll it out, and the speed at which you operate as a company, there's got to be marketers in fintech right now that would just kill at this,
Yeah.
right? So
And I'm open to that kind of background too. Like you don't have to be crypto native, but it is helpful. And I lead all of the marketing for Noble, even as my role as CEO. So I'm really like looking for somebody to kind of step into that role full time so I can work on other stuff.
yeah, tell me about your business partners.
Yeah, so I have two co-founders. So I started the project back in 2022, and that was just like a figment of an idea. Was kind of working on it part time, and then I realized, hey, there's like something here. I need to do that. I need to raise capital. I need to, you know, find a co-founder. And so I brought on my first co-founder, Stefan, also Canadian. He used to be the president and CFO of Ether Capital, which is a publicly traded company in Canada, in the Ethereum ecosystem. So he joined me as my co-founder, and then we found our third co-founder, John, who is our CTO, and he's the technical kind of visionary behind the project. And so us three raised our seed round. We did that back in 2023, $3.3 million. And then we really just executed, did what we said we were going to do. And then based on that track record and ability to execute, we were able to raise our Series A that Paradigm led, which was a $15 million round. And then we've just grown the team significantly, and now we're 15 people. So yeah, it's definitely been an interesting journey to like grow an organization and do all the talk about like putting processes in place. But honestly, we've been pretty like good at it, I would say, and it's really just the people at the end of the day that are gonna make it or break it. So yeah, we have us three have like a very good like overlap of like skill sets, and it's been great.
That's awesome. I think we leave it there. I've got three takeaways.
Yeah,
I don't know. I kind of work in threes. Composable yield as just like an idea is just
yeah,
I just love that as an idea. The design space is growing. Like you give people composable yield, and people are going to be able to build new and interesting things. So it sounds like you're starting to see like these really interesting little manifestations of that. And then like I always say like everything is possible in DeFi. And I think you
yes.
you sort of hit on that a few times in this conversation. Like as that design space grows, everybody's gonna see that like this is not what we imagined. It's even better. So thanks for making the time today.
Thank you so much for having me. It was really fun. I appreciate the thoughtful questions, and yeah, it was nice.